What's up, everybody? Man, I am straight gonna get shadow banned from just all the industry nights. I'm no longer gonna be the cool kid in mortgage with giving you guys all these tips and breaking things down like this, man. I'm telling you, people are like, dude, are you messing with my money, dog? Why are you telling them this? Please tell them something else, man. Just stop telling them how to work against us. You're making my job harder. You're making my paychecks go down. I can hear it now. Anyway, all right. Thanks for joining me, everybody. I'm going to break down Helocs today. Real quick, market did get a little better. And I wanted to show you guys the 10-year treasury. If you guys want to, like an easy way to track interest rates daily, like if the market moved up or down, um, this is an easy way. 10-year treasury. This isn't a representation of interest rates. This is really yields on the 10-year treasury, which I'll save that topic for another day. But just, man, you can kind of see what's going on. This is right now it's red, and I'm just told you that interest rates are better, but the market's closed anyway. So moving on here, guys. So what I want to talk about today, like I was saying, is HELOCs and man, just the industry, man. The industry is tainted by money. It is. All right, so here's the deal. Lenders make less by doing a HELOC than they do a regular loan. And let's just pull up some interest rates here just to kind of get an idea, right? So you're sitting at a 2.5 interest rate. Lenders right now, this is Golden One, a local credit union nearby me. Their interest rates, I mean, every single rate on here is in the sevens. You know what I mean? So right there lies a problem, right? So we know that if you follow the money, right? We're using our brains and we're following this money. If we know that these lenders get paid less, like actual compensation to the loan officer gets paid less by doing a home equity line of credit, there's an incentive to pull you out of that 2.5, 3.5 interest rate just right there. I mean, is it ethical? No, it's not ethical whatsoever. We need to do what's best for the homeowner and the consumer. But like when real paychecks are on the line, man, all of a sudden products aren't offered anymore, or sorry, we don't have that product right now, or man, hey, even you don't qualify for that product, right? So man, it's a sad world out there, guys, but I want you guys to know this so you can protect yourselves. And another kind of trick or way that lenders will use the offering of a HELOC against you, or not against you, but just to get you to apply. You know, you may call a lender and say, hey, I want a HELOC. Like I hear my neighbor just got one. He loves it. He just paid off all of his credit card debt. Set me up with one. And they'll be like, yeah, I got it. Like, let's do it. Let me get your pay stub, your W-2, and let me run your credit and all those things. And you send it all in and run it. They run it. Mr. Jones, man, I'm sorry, you don't qualify for a HELOC. Well, why? Well, do you remember that collection you got 20 years ago that's paid off and has nothing to do with anything? Well, sorry, man, you don't qualify based on that, man. Yep, I'm sorry. But, you know, what we could do is we can give you this 30-year fixed rate here at 7.6, and we can pay off all that debt. And don't worry, man, rates are going to come down in the next 2-3 years. So we'll refinance you out of this into a lower rate anyway. So it's just a temporary thing. Don't worry about it. And a lot of people say yes to that. Man, a lot of people go with that flow. Boom, they're out of the 2.5. They're out of the 3.5 rate. Might not ever get that rate again anymore. And that's all she wrote. So why, going back to compensation, man, there's no money in HELOCs. Ask me how I know, but I'm doing a ton of them. Why? Because I'm thinking long term. So that is the biggest thing. But I also want to teach you guys where to go to get a good HELOC. And it's real easy to kind of figure out. So let me pull up a calculator here and let me show you guys a couple lending fundamentals that you'll need to know to determine who you should talk to get this product. So there's banks and credit unions. and lenders like myself, right? So credit unions typically have better interest rates on home equity lines of credit when you're under 80% loan to value ratio. They're going to lead that pack in interest rate when you've had your home for a while and you built up some equity, or there is no or. That's when they're going to have the best interest rates for you. If you're above 80% loan to value ratio, you're kind of stuck with me. So shoot me a DM, get at me on Instagram or something. Google me, you'll find my Zillow reviews with my cell phone number. Give me a call. But let's talk about loan to value ratio, because I'm sure that just went over some people's heads, right? So if you bought your home at 500,000, let's use that number, and you put 5% down. So now your starting balance is 475, right? You guys follow that math, I hope. Let's say the home appreciates for a year. Let's say it goes up $75,000 in value. So now your value, isn't 500. Now we're at 575. 1, 2, 3. But you still owe that. The balance is going to go down a little bit, right? So the balance will go down a couple grand, literally a couple grand. I did the math earlier on my amortization schedule, which I'll talk about in another video. Goes down about $6,000 on this number, or excuse me, on the 475. So let's just keep it at 475 for easy math. Value's now at 575. Me as a lender, I can lend to you up to 95% of that new value, right? So we're at 575 times 0.95. This would be the max between the first loan that you have and the second loan, or the home equity line of credit loan, that you can get from a lender like me that actually does home equity lines of credit. So from here, we need to minus out the 475, but let's just go 470. Remember, the balance went down a little bit. Boom. So that would be the total that you can get in a line of credit from me. So you're gonna need a really good credit score with going up that high, 95% loan to value ratio. Definitely gonna need a 7 in front of it. Like, if you got 650, man, I could get you a loan, but not this type of high loan to value ratio HELOC. Nope. So boom, there you go. And that's another reason, guys, that it's really important to do a HELOC when you still have good credit. I'm not sure what happened there, but don't follow this. It's really important to do a home equity line of credit when you have a good credit score and when you don't need the money, because man, once your credit cards are maxed out and your score goes from in the 7s down to something in the 6s, then that cap of 95 gets cut a lot, man. It goes from like 95 to, man, at 650, I think I might be capped at 82, so now you're not getting a loan or it's pointless. So once again, if your new loan to value ratio based on the new value of your home, it's appreciated some. If you still have a loan to value ratio that's over 80%, you're going to probably need to work with me. Yeah, you're going to need to work with me. If it's under 80%, it's going to be best to check out a credit union or a bank. I like Golden One. I think they're a California only based credit union, but just check out your local credit union and see what they're talking about if you're under 80%. If you are I'm licensed in a lot of states, so I wanted to also show you guys that real quick. Here's all the states. Here's my branch manager license. Here is my boss, James Coquinos. That's my dog. Here's all the states that actually Jimmy's licensed in all these, but all the states that our branch can do business in. So if you are in one of these states and want a HELOC, we can do it for you. Here's my states in particular where I would directly be working with you as your loan officer. I can do business in all these states here. So hit me up. Would love to help you. If I directly can't help you, I might supervise someone on my team that can help you. So I'll make sure everything goes smooth and copacetic. If you have any other HELOC related questions, leave them in the comments below. I like to get a lot of feedback from you guys. So, man, and I missed a couple. I like to kind of tally you guys throughout the conversation too to see if you're following and ask you questions. So I think I dropped the ball on that, but just wanted to get this recorded and get to sleep, man. It's actually my second time recording it. The first time I recorded it, chopped my head off and the screen didn't record. Guys, like, dang. So anyway, HELOCs, they're good if you use them to pay off debt. Don't be fooled by a shady loan officer that's worried about their commission check and not you. Man, if they don't offer you or don't give you a HELOC after sending all your stuff in, could be that they are looking after their paycheck. So, man, if you want a second opinion, or if you're just not sure where your loan to value is and want someone like myself to pull up the comps, I would love to. Just shoot me a message. I'll pull up some comps on your address, kind of figure out where you're at. And if it's better for you to go to a bank, I will tell you. It's not a massive money-making proposition, like I've said. And even then, if I prove my trust to you up front on something like that, I would hope that you come back to me when I can help you, if that makes sense. So anyway, see you guys later. I'll see you tomorrow.